Then going back to the African Development Bank's report, which is really very good. After tepid real GDP growth of only 2.1% in 2016, Africa's economy recovered with 3.6% in 2017 and 3.5% in 2018, expecting growth to accelerate to 4% in 2019. 40% of African countries are projected to see growth of at least 5%. Average current account deficit is projected to decline from 5.4% to 3% in 2020. 40% of African countries projected to see growth of at least 5%, we said that. But while recovery from 2016 is good news for Africa, projected medium-term growth of 4% is insufficient to make a dent in unemployment and poverty because of the demographic dividend. Population growth of more than 2% implies that GDP per capita will increase less than 2%. Working age population is projected to increase an average of 2.75% a year between 2016 and 2030. Lots of folks term that the demographic dividend, but I think it's binary and it could be a demographic time bomb if it's not handled well. Of Africa's projected 4% growth in 2019, North Africa is expected to account for 1.6 percentage points. Average GDP growth in North Africa is erratic because of Libya's unstable development. After declining for 3 years, Libya's GDP increased in 2017 and 2018 because of higher oil production. Despite this, country's GDP remains roughly 15% below its pre-revolution level. East Africa, the fastest growing region, is projected to achieve growth of 5.9% in 2019, 6.1% in 2020. Nigeria is Africa's largest economy, fell into recession in 2016, but is gently recovering at the moment. But saying at the country level, slow growth in Nigeria and South Africa is dampening Africa's average growth. And they currently account for a large share of Africa's GDP, but only 0.2 to 0.4 percentage points of Africa's GDP growth. Ethiopia is on a high growth path, and that contributes about 0.2 percentage points, more than South Africa. Egypt accounts for more than 1 percentage point of Africa's growth. And you know, I've said before, I disagree with President Sisi on many things, but on the economy, he took hard decisions, and they're beginning to pay off. If African countries are again affected by extreme weather conditions due to climate change, as they have been in recent years, agricultural production and GDP growth could be lower than projected. I've said it many times before, but a sub-Saharan African economist has also got to be an accomplished meteorologist, because rains have an outsized effect on GDP and well-being. Inflation is highest in Sudan at 188%, and lowest at 2% or less in members of the Central African Economic and Monetary Community. Africa's country size, openness to and trade intensity with the US and China are significant, and this is the question I posed a while back about if China sneezes, will Africa catch a cold? Remittances continue to gain momentum, dominate the other components of capital flows, of $69 billion in 2017. And I've called it severally. I've said remittances are indeed a wonderful silver bullet. FDI inflows shrank from the 2008 peak of $58.1 billion to a 10-year low of $41.8 billion in 2017. Africa's gross GDP, debt to GDP ratio reached 53%. That trend we know about. African countries have been borrowing more money and more expensive money, in point of fact. External debt service as a proportion of exports increased from 5% in 2013 to 10% in 2016. And in 2017, bond issues from Cote d'Ivoire, Egypt, Nigeria, Senegal, South Africa, and Tunisia amounted to $19.3 billion, bringing the cumulative total since 2010 to $69.5 billion. In an interview with Nick Norbrook of Africa Report, I said we're starting to see more granularity coming into the pricing of African bonds. Not so long ago, when the liquidity was sky high, all these Eurobonds were clustered within 50 basis points of each other. South African all shares up 1.89% this year. Dollar versus rand, last time I looked, 13.85 trading. Nigerian all share minus 1.35% in 2019. We got an election and could possibly create quite a bifurcated outcome. Ghana Stock Exchange is minus 0.56% year to date. Madagascar's new president pledges investor-friendly policies. And Andry Rajoelina, previously a disc jockey, 44 years old, said we will establish real competition and stability to attract investors.